Welcome to a brand new series, Vantage Point, first of its kind investment talk show in Sri Lanka.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
A review of global and local economic situation, capital markets and selected stocks. In Vantage Point this week, Deputy Governor of the Central Bank, Dr. P.N. Veerasinghe, will be participating along with Chamikara Gunawardena, Founder Director, Investor I Private Limited. Sponsored by Investor I Private Limited. If you are looking for investing through research, don't miss your Vantage Point.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
Right here on Radio Sri Lanka. Welcome to Vantage Point with Chamikara Gunawardena, who is the founder of Investor I Private Limited, Sri Lanka's first independent and bilingual investment research provider, creating awareness of investment options and disseminate investment knowledge among the general public. Now, if you might remember, Sunday before last, we discussed some of the more important factors affecting the stock market. Things like the macroeconomic development, sector development, geopolitical development, and the local political development, among others. Our target audience is professionals, academics, businessmen, students between O-level and university, and graduates. In today's program, our guest is the Deputy Governor of the Central Bank, Dr. Nandalal Veerasinghe, well-recognized and respected economist. So welcome to Vantage Point, Dr. Veerasinghe.
Thank you very much.
I was very encouraged reading a statement that you had made to the Daily News regarding how the government has significantly improved the fiscal policy of the country in the recent past, thereby helping the country to record a sustainable economic growth and also to maintain inflation at a single-digit level continuously over the past 4 years. Now, that was a very encouraging statement you had made to the press. Could you add anything more to that?
Basically, what I was trying to explain is that overall macroeconomic stability in terms of inflation, fiscal deficit, and also external sector are the most important macroeconomic variables that helps any country to grow. So basically, what the clear message here is that for any investment to prosper or a country to grow, it's very important. Most important part is the macroeconomic stability. So that's where we have achieved in the last 3-4 years in terms of low inflation, single-digit inflation, and also fiscal consolidation, and as well as a very relatively high economic growth. So that's one side. The other side for any investment is basically the political stability, as you have already mentioned that you have discussed. Political stability is also a very important part for investors to take positions in a company or in the country or in any areas that they are interested in. So those are two key components that we have seen in the recent past. So on that basis, now we can move forward how this country can go forward in terms of expanding investment so that we can achieve a reasonable at least 7 to 8% growth for next few years. So in that journey, one of the most important part is the development of, as we going to discuss today, is capital market. So I will discuss a little bit more detail why that is important and how we can benefit from that.
Now, just before we enter into that subject, could you also brief us about how significant is the improvement of the fiscal policy of this country? Now, this has happened in the recent past.
Actually, the fiscal, if you look at the history of Sri Lanka, especially after 1977, then economy was open. 30 years from 1977 until recent, for example, about 35 years, until 2007-8, or at least 5, average fiscal deficit that the country has run, average is about 9.5% of GDP. That's a very large number compared to any other country in the region or compared to most of the European countries. That was one of the key macroeconomic instability or imbalance that this country had to run for more than about 30-35 years. Actually, there are reasons as well for that. One is that we had this ethnic conflict or the war for a longer period where government had to spend a lot of money on that. And secondly, all the successive governments have been implementing large infrastructure projects, for example, like Mahavali in the 1980s, and then later a lot of other development projects by this government. So as a result, fiscal deficits had to be very high. But the consequence or result of that high fiscal deficit basically is the government will have to use all the domestic resources that were available in the country to finance fiscal deficits, which means there had been a crowding out of the private sector investments. So then when government is raising a lot of money, borrowing large amount of money to finance this deficit, that also has implications on inflation. So these are very closely related. That's why in that 30 years that I was talking about, the inflation was also on average was 12% on all this period, 30-year period. Average inflation was around 12%. That is correlated with average fiscal deficit of almost 9.5%. So that's why I was mentioning that this government has strongly committed to bring down this fiscal deficit from about 10% to around now close to 6%. So as a result, we have been able to, from the central bank point of view, we have been able to implement monetary policy much more easily, and also we have been able to deliver single-digit inflation for last 4 years continuously. This is the first time in Sri Lankan history we have been able to maintain single-digit inflation, which means inflation below 10% for over a period of 4 years continuously. Before that, longest period was more than 20 months or something like that. So that is why it is very important, and also while bringing down fiscal deficit, it gives a lot of opportunity for the private sector, and it releases a lot of resources for the private sector for their investments. So then that private sector can use those additional resources to increase their investment, so they can support economic growth. That is why this is also part of capital market development as well. Why the capital market was developed in the past, basically lot of the resources that were available domestically had been used by the government. So with this program, and also government has now strongly committed to bring the fiscal deficit further down in next 2-3 years, which means there will be a lot of opportunities for the private sector, for the capital market players to mobilize these resources and expand their investments and use those resources more effectively, so that country can grow with more private sector led growth.
To go along with that, Dr. Veerasinghe, it was Ajit Niwad Cabral, Governor of the Central Bank, who said very recently that Sri Lanka of late has been internationally recognized as a breakout nation. Am I right in saying that? And the Governor?
This is actually very right. One of the reasons what that meant was, now Sri Lanka is going to reach $4,000 per capita income by 2016. So what we have seen in our research, basically, when any country, this is based on international research experience.
Yes.
When any country reaches $4,000 per capita income, so beyond that point, there are a lot of challenges for any country to go beyond that point. Basically, the experience is that a lot of countries, after reaching that point, then they had failed, and they had not been able to go beyond at the same phase that country has reached. For example, now in Sri Lanka, about 5-6 years ago, we had only $1,000 per capita income. Now we are reaching almost 3,000, and we are going to reach 4,000 by 2015 or 16. But then that is the crucial point. From that point, for us to take over, then that's why we call it breakout nations. The countries that has failed to pick up from that point are called middle income trap countries, so that they are caught up in the middle income trap.
So we are different.
We are going to be different. That's why the policy of the government has been designed very carefully. Once you reach that point, we want to become breakout nation, which means we will continue to grow at the same pace, so that we can go very fast and we can improve the living standard of people without getting into the so-called middle income trap. So we want to be the breakout nation. So that is very clearly articulated. That is where all these 5 hub concepts plus the tourism hub that comes to diversify the economy, so that even coming from that point, we can take off from that, and then we can be a breakout nation.
I want to ask you two very important questions, Dr. Veera Singh. First, regarding the capital market. Now, how would a well-functioning capital market help in the economic development of a country? In this context, of course, it's Sri Lanka. How could this help in the economy of a country?
Yeah, I think that's a very important question. Now, if I look at the past experience in Sri Lanka, we have to admit that our capital market has not developed much as the economy, economy expanded. For example, now some countries, for example, Singapore, Malaysia, or Hong Kong, all these countries, when economy grows up, for example, 7-8%, which means our economy has reached about $60 billion economy right now. But the size of our equity market is only about 20 billion. It's about almost 35%, 40% of the GDP. But at this level of development, usually we would like to have about 50% of GDP, at least 60% of GDP, and then going forward, if we are going to be a $4,000 per capita income, which means $100 billion economy, then we would like to, there would be opportunities for stock market to become from current 20 billion at least to 70 billion. That's in terms of US dollar billion, in terms of the size, which means, so there will be a lot of opportunities. So it's very important that our equity market and debt market would be developed to that level, so that the economy can support the growth. So what has not happened in the past, basically, if you take the financial markets, there are three components. One is the banking sector, then you have non-banking sector, then you have insurance, equity and debt market. What happened in Sri Lanka situation basically was that in the recent past, because of the problems that I was talking about, and also political instability, and also some of the high inflation and fiscal deficit, only the banking sector developed as in line with the economic growth. So that's why if you look at this country, all the financial intermediaries, which means mobilizing the savings of people and using this savings for investments, major channel has been the banking sector, which takes about almost 70% of the financial.
So that sector is very important.
Sector is very important.
Deputy Governor, the banking sector.
Yeah, that's very important. Then our banking sector has been developing as in line with the growth in economy. But what we did not say is that capital market, which is the equity market and the corporate debt market, that markets did not develop as much as the face of the economy. So the problem in that area is basically when capital market is not developed, everyone will have to depend on the banking sector to make investments. For example, if there's anyone who wants to expand their economic activities, usually they go to a bank and ask for a loan. There's a very limited opportunity that most of the people have. But if the capital market is developed, for example, the equity market or the debt market, then there are alternative very good opportunities for people to raise capital, for companies or private sector to raise capital and expand their investment in a lot more efficient and effective and less cost way. So that is why the development of capital market is very important. Especially there are two ways. One is the available domestic savings. To mobilize available domestic savings for domestic investments, capital market will have to play a very important role. In addition to banking sector, equity market and the debt market will have to play a very important role, because once they expand, then investors will have a lot more opportunity. Then other part is that Sri Lanka's country, where savings, domestic savings are not sufficient to meet all the demand for investments for this country to grow at 7 to 8%, which means we need to attract foreign capital, external capital. So because if I talk about numbers, for example, in last year, our investment to GDP, that we achieved almost about 7%, 6.5% growth.
Yes.
Where investment to GDP was about close to 30%. But our domestic savings was only around 25%. So then we had this gap of 5% of GDP in terms of savings. Then how this gap is filled, basically, then that's where it's very important that we should be able to attract foreign savings into this country through various channels. One is loans or debt, other one is through equity market, other one is corporate debt market. So if those capital markets are developed, then it would be much easier for this country to attract foreign capital. So this other part that I talked about earlier, how the domestic savings are mobilized, but domestic savings are not sufficient for us to reach that kind of economic growth. That's why once these two markets are developed, then The other channel is that then foreign investors can come in quite easily and they can expand their investment, they can bring in their savings and make investment in Sri Lanka. So that's why these capital market developments are really important for this country to reach that level of investment so that we can grow at least around 7 to 8% in the next 2-3 years so moving forward.
After the end of the war, foreign investments in particular have come in very freely. So I think it will continue to grow that way in the future as well.
Yeah, exactly. If you look at the developments in the foreign investment side, I think before 2005-6, on average, foreign direct investment on average was about $200 million per annum. So that's actually about 0.5% of GDP. Now, if you look at the numbers now, last 2-3 years, continuously 2 years, we have exceeded $1 billion in foreign direct investments. So, which means almost 5 times. But that is also not sufficient. We have to admit that we need a lot more, because after the end of the war, there has been a lot of interest in not only foreign direct investment, but if you look at from the government side, government bonds. So, government bonds issued to foreign markets. For example, government issued first sovereign bond in 2007 for $500 million. That was first, even during the wartime. And then at that time, government had to pay 8.25% of interest rates for this $500 million borrowings. Now, after that, in 2009, again we raised another 500 million. At that time, we had to pay only about 7.25%. And then last 2 years, we had issued $1 billion each bonds in 2011 and 2012. Now, because the investor confidence has improved a lot, when we issue $1 billion bonds, there was a demand for more than 10 times of the $1 billion. And as a result, we have been able to bring down the cost of borrowings from about 8.25 on the first time. Now it's almost close to 5%. So basically, it reflects the investor confidence by the foreign investors in the Sri Lankan sovereign bond. So that actually indicates if we have instruments, if we develop the market, there is a lot of interest by foreigners to invest in Sri Lankan instruments. So that is where we have to play an important role. If we develop in the equity market and corporate debt market, then that will create a lot more opportunities so that there will be a lot of foreign investors who are interested in Sri Lanka. They have a lot more options, a lot more channels to invest. Another example I would like to show is that the foreign investors' interest in Sri Lankan government securities market, for example, treasury bills and bonds. Now we recently, from 2009 onwards, we opened up this market for foreigners. First time it was open only for 5% of the debt stock, and investors came in and took it within few months, and then we have expanded this up to 12.5%. Now what is happening, whenever we open up a portion, immediately investors come in and take this position, which indicates if we have instruments, if we give them opportunity, there are a lot of investors who are interested in investing in Sri Lanka. So that's again highlights why we need to develop equally the equity market and private sector market, corporate market, so that once we develop this market, I'm very confident that there will be a lot of interest in Sri Lanka, because now they are looking at Sri Lanka as a very positive, investor destination in terms of overall macroeconomic stability, in terms of political stability, in terms of growth of the country moving forward. So those are very positive factors when they take into account when they make investment. What they are looking at basically the alternative diversified opportunities for them to invest. Basically, if for any investor, if they invest only in one instrument, then they would face a risk. So that's why they want to diversify their portfolio so that they invest in different sectors, not only in the government securities, but also in the stock market, but also in the corporate market, so that they can diversify the portfolio and they can, take the advantage of the growing economy.
We are with Dr. Nandalal Veerasinghe, who is the Deputy Governor of the Central Bank, and he's touched on some very important aspects this morning. This program, Vantage Point, with Chamikara Gunawardena, is broadcast every other Sunday between 10 and 11. And the number to dial is 0777 534. That's 534435. 0777-534435. Now, one more question from you, Dr. Veera Singh, and that is, how important is an independent investment research for a country's economy, and of course considering the capital market?
So actually, when investor comes in, the first thing they look at it basically the research. For example, if foreign investor or even local investor who does not have very good knowledge in the economics in the sectors, then they need to be guided by independent research. Then it will facilitate for them to make their investment decisions more prudently. For example, now why I am saying this, if you look at the other developed equity or debt markets, people actually heavily rely on independent research. Now, for example, I give one example. If you want to invest in developed markets, if you go in and register with a broker, and then they have access to all independent research through their account. So that then, for example, in the Bloomberg or in the Reuters, there are a lot of independent research published by these independent people, and then that provides good guidance. So, for example, if I want to invest in a company, I may not be an expert in that sector. I may not be an expert in that company. I may not know the balance sheet of the company or the how that company is going to fare. Then I would like to see what independent people say about this company. So then there are two kinds of research. There are certain people, those who have some interest in that company, they would always write the positive side, only positive side of the story. Their investment cannot be considered as independent research because they have some interest. But usually for investors, what is useful for investors is some independent view of that company. That is why if you look at the independent research by companies those providing services, any author of this research paper would have to declare, there's a regulation in developed markets, they have to declare that I don't have any shares or interest in this company. So that is a requirement by regulation. Then the reader or the investor knows that this person view is a very independent view, so that I can believe that view, so that I can take my position in that view. That is one important part, so that improve the credibility of the research. Rather than having some only one-sided view, then that could create some lack of credibility. Another point is that basically in Sri Lankan context, if you look at the number of investors who are doing business out of the banking sector in the equity market, in the stock exchange, or in the corporate debt market, maybe less than 1% of this population, and mainly concentrated in the Western province. Some educated people are only engaged in this market. That is why one of the reasons this market is not being developed. So for the independent research is very important. Especially, I'm happy that this is a bilingual research firm. If we want to promote the equity market or debt market among general public of Sri Lanka, then it's important that this research are independent, and also the research go and outreach the broader section of the people, not only very limited number of people in Colombo, or only very limited number of educated people, but also outreach the more broader community, so that they also understand the investment in the equity market, and they understand the benefits of the equity market. They can rely on independent research. That is something very important in the long term, in the medium to long term, for us to expand the market, expand the participation of people. That's one of the important things, because then that improves the liquidity, that will deepen the market, and then it would be easier for anyone to engage in the market. So that's one thing very important. With that, let me also, I think I would like to highlight one few things about some of the measures that government and the central bank has introduced to develop the capital markets, encourage the capital market development, looking at the overall economic development and where we are going forward. If you can remember, in the last budget, the government, there are three important proposals the government introduced. One is government would encourage a lot of companies to come and list in the Colombo Stock Exchange. One of the important things is that when the Colombo Stock Exchange is becoming bigger, then that require a lot more opportunities. A lot more number of companies are listed, which means then it require a lot more opportunities for diversification for investors. To encourage that, government has now proposed a tax holiday for new companies that will be listed in Colombo Stock Exchange before end of this year, and also they will have to maintain 20% of shares with the public, which means they have to open up their companies. They have to offer their companies. They encourage private companies or family ownership, single ownership companies come and list in the Colombo Exchange, so that exchange can be a lot bigger. That's one thing. And other important hurdle we had, corporate debt market, which is also one important market that we have to develop. There was a withholding tax on corporate debt, interest income on corporate debt. That was also exempted from this year by the government. That's to encourage. As a result, we have seen a lot of banks are now coming up with new corporate debt issues. So to take the advantage of that concession provided by the government, then that is also aimed at developing the corporate debt market. That's the other thing. And also promote the stock brokering business. They have given some depreciation allowances for them to expand. So that's the other part. And on the foreign exchange side also, as I said earlier, we need to attract foreign investments into the country, not only for the foreign direct investment, but also Colombo Stock Exchange into the corporate debt market. And for that, there had been some restriction or controls from the point of view exchange control department of the central bank. Now we have relaxed those requirements, and for example, any corporate entity now, if they want to bring foreign capital, they can go abroad and raise up to $50 million without any permission from the exchange control department of the central bank. Earlier, if anyone wants to go out and raise capital, they had to come to the central bank and get the approval from the exchange control department to do that process. But we have simplified and liberalized that, so that any corporate entity, people who are having good balance sheets, they can go and raise capital for their development. That we encourage that. And the other system that also we encourage banks also to raise their capital from outside within certain limits without any approval from the exchange control. And also one other important part is that we know there are Sri Lankan expatriates and Sri Lankans who may have some savings abroad. They may have earned while they are working doing the business, and then there was some restriction for them to bring in this money and invest in Sri Lanka. So to encourage that kind of people to come in, bring in their money and invest in Sri Lanka, government has now permitted for them to bring in up to $5 million. And then that would provide some tax concessions. If they invest this money in Sri Lanka, then they would get some tax concession, and then they would not have to pay income tax on their incomes in the past. So that's also a very important part that encourages Sri Lankans who have some money abroad, then for them to bring that money and invest in Sri Lanka, so that will help develop the corporate or capital market in Sri Lanka.
Well, the words are very encouraging indeed. I mean, lots of those who are listening in benefited by your input this morning on Vantage. You've tackled two questions beautifully. Deputy Governor of the Central Bank, how would a well-functioning capital market help in the economic development of a country, and how important is an independent investment research for a country's economy and the capital market. So I just want to thank you very much on behalf of the station for your time and participation. Dr. Nandalal Veerasinghe, Deputy Governor of the Central Bank.
Thank you very much. It's my pleasure to share my views with the general public. Thank you very much for the opportunity.
Right, the phone number to keep in mind is 0777 534435. You can call on this number between 11 and 12 every other Sunday and get more details about this program. I'm sure Mr. Chamikara Gunavardhana will be only too happy to answer your queries. The number again, 0777 534435. Now we are with Mr. Chamikara Gunavardhana, starting off the rest of the program with the subject, what must an investor do when investing in shares?
Before we get into this area, Nihal, I think we should recap what we discussed last time. In the first program, we discussed about the myths of investing in Sri Lanka stock market, and in the second program, we went into discuss about the factors which are affecting the stock market performance, like the macro aspects, the macro factors, as well as the micro factors. So in the macro factors, we discussed about the key economic indicators affecting the stock market, like GDP growth rate, unemployment rate, inflation rate, and the interest rate. And in the micro factors, discussed, we discussed about the financial results of companies, the corporate actions such as share splits, bonuses, rights issues, mergers and acquisitions of that company, the disposals, etc., etc. And in this program, we would like to focus, question me, things an investor should do when investing in Sri Lanka stock market. Now, if the person is new to share investing, first he or she needs to do is to open an account with a stockbroking company. So it is always prudent to open an account in a company which has a relatively good research team. So when an investor approaches a stockbroking company, he will be assigned with an investment advisor. So I always recommend anybody who wants to invest in share market to open accounts not just in one stockbroking firm but in at least 2 to 3 broking firms. The reason why I am saying is very important. This is because if one advisor in one broking company advises on a transaction, the advisor can seek advice or views on the same transaction from other. If you have accounts, if you are dealing with other broking companies, you can seek advice on the same advice that was given by another broker through the other brokers that you are dealing with. So if the advice is similar on the transaction, he or she, the investor, can be more certain about the decision he's going to make instead of relying on one advisor and one broking company. And if he gives one advice, and you can ask your other broking companies and ask your other brokers, what do you think about the advice given by this investment advisor? And if the advice he or she receives on a transaction different among the three, if you have 3 broking firms, then the investor of course needs to be quite cautious and possibly also should not follow the initial advice. Secondly, I think all investors should seek the research reports produced by the broking firms. It is not just verbal recommendations. Most of the times, most of these broking firms do provide research reports. So you as the investor, as a client of that broking firm, you have the right to ask for those research reports.
So going through that research report is of paramount importance, do you think?
Absolutely. Because there is big difference between a verbal advice and written advice.
Yes.
In a written research report, it is more comprehensive and it is very detailed. Whereas verbal advice it's not comprehensive at all. It is
can be hollow.
Yeah, it can be hollow also.
Yes.
Whereas a written report, and when the person who is writing the research report takes more seriousness and is more careful when he is writing the report, because that is on paper. Whereas verbal advice is not recorded usually here, can lead to misunderstanding. And so when we talk about these research reports produced by broker firms entail number of updates like daily update, daily stock market update, weekly stock market update, and these corporate research reports with buy, sell or hold recommendations. And there are sector reports covering number of companies in one sector, and there are economic reports done by broking firms, as well as special updates like on budget review. So my experience is that after working in the industry for almost a decade, many broking firms with good research teams unfortunately do not share the research reports published. It's not that they do not share the research report with everybody. They do not usually share the research report with the small investors.
Right.
I mean, this is quite unfortunate, since the research done by companies is supposed to be distributed to all clients, irrespective of the size of the portfolio. So all clients in a broking company have the right to, as I said earlier, to demand not only to receive the research report, but receive the research report at the same time as the bigger clients of the same company. So usually what happens, the reason why they do not want to share this research report with small-time retail investors is, this may be a little controversial, because they would like to prioritize their clientele so that they give an advantage to their big clients. It should not happen, but I think it does happen, and I have seen that happening in this industry. If all participants and stakeholders, the regulator, takes firm action on these things, I think we could correct these unfair happenings, unfair incidents in the industry.
So these are the issues that the investor can face from time to time.
Yeah, that is one issue. That's one issue.
Yes.
And thirdly, step investors should take is that all investors should be able to. It is not a step, rather. It's an action. Investors should be able to read and understand the basics of 3 financial statements. Because if you invest without knowing the financial position, the financial performance of a company, it is your hard-earned money. It is like you are getting into some difficulty without knowing where you are getting into. So the 3 basic financial statements are profit and loss account, balance sheet, and the cash flow. I know it is difficult for a layman to understand, but there are a number of books written in English. But even if you cannot read English books, there are investment books written in Sinhala. So you should go through those books and understand the basics of the financial statements before making a transaction on the advice of the stockbroker. So I always recommend please ask why do you recommend this stock. I mean, if the recommendation is buy, why do you recommend us to buy it? If the recommendation is sell, why do you recommend? So that one thing, if he cannot convincingly say why he says so, which means there is a doubt about his convincingness about why he is saying. So you need to, then there is cautious about his advice. So even if his advice is convincing, it is always advisable to check the credibility of the advice through someone you know. That person may be someone who has experience in investing and who has more knowledge than you, who has more knowledge than the investor about share investing. So then you must go through the key section of the annual report. The main sections are, other than the financial statements, understand the financial statement, the chairman's and CEO's statement, management discussion and analysis, financial review. I know this may be a little difficult for layman, for novice investors to understand, but they have to work hard to understand these basics.
So with all this considered, even advice given to the investor can go wrong.
Well, let me get into that later
on.
Yes. So now we talked about the research provided by stockbroking company. Now, if your broking company has given you a research report on the stock they recommend,
yes,
read it carefully and look at the financial projections and valuations carefully. Well, the novice investors may not understand what financial projections and valuations are, but as I said, there are books written about the stock market investment. Please read them before you make investments. So if the valuation, the broking firm or broker is recommending, and if you compare the valuation of that stock recommended by the stockbroker with some of the peers, the companies in the same sector. Now, for example, if it is Sri Lanka Telecom, somebody is recommending. So you need to look at what the valuation of Dialog is, and also the valuation of the sector as a whole and the market as a whole. It's not just looking at the historical valuations, but when a broking firm's research unit do research reports, they do have projections of these companies, financial projections. So look at the forecasted valuations as well, and if possible, speak to the analyst who has written the research report. Because if a broking firm produces any research report, it has to be by an analyst, nobody else, because analysts are the qualified and suitable people to write research reports. Investment advisors do not write research reports, and they do not have the competence, because they are not taken to write research report. They are taken to brokering and give investment advice, whereas analysts are recruited only to write research reports and give recommendations through a process. The last one is an investor should look at or do is when planning to invest is he or she must keep himself or herself updated about the latest developments in the economy, the global economy. I mean, if you are interested in investing in a sector or company, you need to read about that company, the website, the relevant newspaper articles. There are a number of good newspaper, financial paper is Financial Times, and there are a couple of good websites, business websites like Lanka Business Online. So when an advisor or a broker advises you on something, you know, or you may already know why he is advising to buy or sell or giving a recommendation on that, because it is already published somewhere. So you are more safe, because otherwise what happens is you are completely dependent on the advisor's recommendation. When you are updating yourself what is happening, you can always check and test whether the advice given by your advisor is accurate or not.
Well, I believe time's up, Mr. Chamika Gunawaradana. Been so nice coming over and talking to our listeners on this very important subject. The telephone number is 0777 534435. You can contact on this number between 11 and 12 of a Sunday morning. Would you mind giving the email address? Or IETHEVANTAGEPOINT @gmail.com. Did I get it right?
That's right. You can repeat it. IETheVantagePoint @gmail.com.
right. And the number again is 0777 534435. So thank you very much. This has been another presentation of the Vantage Point with Chamika Gunawaradana, founder of Investor I Private Limited. And our thanks also go out to our Deputy Governor of the Central Bank, Dr. Nandalal Veerasinghe. Thank you very much, gentlemen, for coming over and talking to us on Vantage Point. A big thank you also to Mr. Karunatilaka Ratnayaka, who coordinated this program, and to our producer Indira Navagammu. And this is Nihal Bharti now signing off until we meet you again 14 short days from now at the same time. See you then. Welcome to a brand new series, Vantage Point, first of its kind investment talk show in Sri Lanka.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
A review of global and local economic situation, capital markets and selected stocks. In Vantage Point this week, Deputy Governor of the Central Bank, Dr. P.N. Veerasinghe, will be participating along with Chamikara Gunawardena, Founder Director, Investor I Private Limited. Sponsored by Investor I Private Limited. If you are looking for investing through research, don't miss your Vantage Point.
Every other Sunday on Radio Sri Lanka from 10 to 11 a.m.
Right here on Radio Sri Lanka.